During the quarter, the Merchant West SCI Stable P&G Fund returned 2.2%, underperforming its benchmark but outperforming the peer group average. Global markets were volatile despite growing optimism that we are near the top of the interest rate hiking cycle. While inflation remains above most central bank targets, it is now trending in the right direction, and there is mounting evidence that higher interest rates are finally having a negative impact on economic growth in the United States. Heightened geopolitical tension in the Middle East and China's property market woes are also likely to contribute to a slowdown in economic activity and prompt central bank policymakers to start cutting interest rates before inflation is within targeted ranges. The uncertain outlook for interest rates and comments from several central bank officials that interest rates would need to stay higher for longer pushed US Treasury yields to multi-decade highs. The 2-year Treasury yield finishing the quarter above 5%, while the 10-year Treasury yield rose 75 basis points to 4.6%. Against a backdrop of rising global bond yields and increased geopolitical risks, global equity markets finished the quarter lower. Chinese stocks were once again the noticeable underperformers as the Hang Seng Index tumbled 5.9% in the third quarter. The tech-heavy Nasdaq index was also sharply down. The FTSE 100 index in the UK was up 1%, one of the very few global equity markets to register a positive return during the quarter. Cash was once again the top-performing asset class in South Africa in the third quarter, while bonds and listed property outperformed the broader South African equity market. The fund's outperformance of the peer group during the quarter can largely be attributed to a low exposure to the resources sector in South Africa, as well as a lower allocation to offshore assets. The fund's listed property exposure was also a contributing factor to the fund's outperformance, as Delta's share price doubled during the quarter on the back of a very positive trading update. Dupula B, Fairvest B, and Equitas also posted strong gains during the quarter. The fund initiated a position in the Merchant West SCI Global Managed Growth Fund at the beginning of the third quarter. At just over 11% of the fund, it is unlikely to have a detrimental impact on distributions and distribution growth because of the lower income yields in global markets right now. It does, however, provide significant geographic and sector diversification, which should benefit investors in the longer term. The position was initiated when the rand strengthened to below 18 rand a dollar early in the quarter. Once again, a reminder that the fund is ideally suited for investors looking to build an income for their retirement and then to manage that income in retirement. The high and growing income means investors do not draw excessively against their capital. In this way, the investor's capital is preserved and is only utilized in emergencies during their retirement, irrespective of how long that retirement